quite a lot to praise. But I'm now turning to a part of the world that doesn't usually get mentioned in the same sentence as good investing, and that's Pakistan. But that's exactly where one of Australia's fund managers, who we often speak to on the Business Channel, has been casting his analytical eye. Jack Lowenstein, the co-chief investment manager at Morphic Asset Management, joins us now on Trading Day. Jack, good to speak to you again.
Good to speak to you, Helen.
Now, Pakistan, you've just returned from a road trip to Lahore and Karachi, but it wasn't all fun and games. You visited several companies. Why on earth are you looking to invest in Pakistan?
Well, we've actually invested in Pakistan before. The market is very cheap, and that's our first, the first thing that grabs us. It's on about 8 times PE, which makes it very cheap compared to, say, India, which is on about nearly twice as much. And the incredible thing is, when you look at the record of Pakistan, of what Pakistan's return to investors over long term in Australian dollars, is actually a bit better than India. So it's actually been a good returning market, despite all its many problems.
So there are great companies that are at bargain basement prices. Is that what you're saying?
I say they're good companies. They're not great companies.
Okay,
they're good companies.
all right.
They tend to be a bit more boring than Indian companies. It tends to be, you're looking at things like banks and cement companies.
But are they experiencing growth? Are they well run? Are their management, do they come up to your scrutiny?
I think they're certainly well run. They are getting very good growth. The economy is now going to be growing about 5% a year, and maybe a bit faster if the Chinese push ahead with their very big project to build a corridor through Pakistan, so they get access to a port in the Arabian Sea called Gwadar.
Yeah, now this is
percentage points.
Sorry, go ahead.
Growth for the next 5 years.
This is a really interesting project, isn't it?
It is. It's part of their new Silk Road project, and they really need to do the thing in Pakistan if the whole of the rest of the project makes sense. So it's very exciting, and we're very attracted to the cement companies over there because they are trading on low Ps, they're very profitable, and they've got great growth ahead. And that growth is going to come from the China-Pakistan economic corridor, but also from growth in housing and infrastructure spending.
All right, so now just tell me exactly how this growth corridor, this Pakistan-China CPEC, is that what it's called?
Yep.
What it's going to be called? How that will actually work, just briefly?
Basically, it'll involve building new roads and railways down from China through Pakistan to the Arabian Sea.
To this port. So it is essentially a transport and logistics kind of route.
Correct, and also it's going to come with quite a big investment in power. Now, power generation is the biggest problem in Pakistan, to be honest. Much worse, in my view, than security.
Really?
Yeah, I mean, I've got to just tell you, I don't want to talk about happy stats, but I mean, I went to Karachi and Lahore. They're both like Indian cities, which I've been to, many of which I've been to frequently, but without the chaos. And Lahore is an incredibly orderly city. A beautiful city of about 12 million people. And what really struck me was that if security is such a big issue, you wouldn't get the vast numbers of middle-class, upper middle-class Pakistanis thronging through the big restaurants that they have there. It's very much a restaurant culture. And so I was actually surprised. I mean,
so what you're saying, they're not sort of worried about their personal security. They go out and enjoy life. They're not really worried about the potential explosions, what have you.
Look, there definitely are issues, but they're not really evident in Lahore or to a lesser extent Karachi. And there's been a big improvement in the security situation in the last 6 months to a year, I'm told.
All right, but if I said to you, in my perhaps limited understanding of it, there are still substantial political risks. There is still an unstable political situation there. It's still home to terrorism and to the Taliban in the north. They are still issues that would affect the economy as well.
There's no question about that. And there's also problems with in Baluchistan, which is one of the frontier states with Iran, where there's sort of kind of ongoing tribal warfare for the last 200 years. So it's not all clear sailing. But what I would say is that we would never put a large amount of our money into Pakistan, but it's important to look in places where there are unexplored opportunities.
So how many companies have you bought, and what sort of rewards are you getting? What sort of returns?
Well, I mean, returns on capital in Pakistan are about, I'd say, roughly twice as high as most of the rest of the emerging markets. And that's because people don't want to invest too much, and so there's no overcapacity issues like you say get in China. Cement plants, for example, are running about 90% of installed capacity, and are being very cautious about increasing that capacity. So these are the rewards you get for investing in a country where others are fearful. You get very high returning businesses with very stable growth, and that tends to persist through most forms of political instability. Now, I want to say one thing on political instability. We're now we're about coming to sort of the 2/3 mark of the second government in a row that looks like it'll serve its full term, which is almost unprecedented in Pakistani history. The army has clearly decided its role is to preserve security and not get involved in politics. It had plenty of opportunities and has decided not to. And so I think there is a possibility of a very big change. I feel it's all a bit like the Philippines. 10 years ago, people looked at the Philippines as a market they should go nowhere near, and yet a series of smaller reforms have seen Philippines emerge as one of the most successful economies in Asia over the last 10 years and have one of the best returning stock markets. And it's not impossible Pakistan might be the same. And let's not forget, the Philippines is still fighting a civil war down in the south.
All right, so it's most interesting, and you are looking at a few more companies potentially.
Yes, we are. I mean, the banking sector there has derated enormously. It's on about 8 times PE as well. It looks as though it is cheap, but it needs to get some growth. The good news is not a lot of risk in it because people don't borrow a great deal in Pakistan, so credit to GDP is incredibly low. The problem is that's partly because of cultural issues. Being an Islamic country, there's a bit of an aversion to borrowing and lending. The other problem is that the banks don't really want to lend to people who want to borrow, and the borrowers they want to lend to are making so much money they don't need to borrow much money. They borrow much more. So that's the concern there.
All right, well, we'll watch it with you over the next several months, Jack. Great to talk to you, Jack Lowenstein from Morphic Asset Management.
Good to be back.